Welcome to Deep Kiran Classes of Commerce and expert coaching with guaranteed success. Please subscribe to my channel and hit the bell icon for the latest update.
Today we are going to start with the first practical problem. Okay, now I'll read out the sum for you and I'll show you the explanation, or I'll tell you the explanation. See, Vikram and Pradnya are partners sharing profits and losses in the ratio of 2:3. Their balance sheet as on 31st March 2018 is as follows. Liabilities and amounts are given, assets and amounts are given. Now on the liability side, sundry creditors, rupees 1,05,000. Then capital accounts are given. Vikram's capital 75,000, Pradnya's capital 75,000. Then on the asset side, cash is given as 7,500. Then land and building as 37,500. Plant as 45,000. Furniture 3,000. Stock 75,000 and debtors 87,000. This is the balance sheet given to you. And the balance sheet date is 31st March 2018. On the very next day, they decided or they agreed to admit Avni as a partner on 1st April 2018 on the following terms. What was the first term? See, Avni shall have 1/4 share in the future profits. See, now Vikram and Pradnya, they are partners, and how much they are sharing? Their existing profit sharing ratio is 2:3. And now from this, okay, they are going to give 1/4 of their total share. Okay, so 1/4 share in future. Second adjustment they have given, Avni, he shall bring rupees 37,500 as a capital and rupees 30,000 as a value of goodwill, for the goodwill. Okay, this is the second adjustment. Third is revaluation of assets and liabilities. See, land and building is to be valued at 45,000. What is the cost of land and building? As in the above balance sheet, 37,500. So there is an appreciation, okay, by 7,500. Then furniture is to be depreciated by 10%. The value of furniture is 3,000. Okay. Now it is to be depreciated by 10%. That means the amount will come to rupees 300. Is it understood? Then next, see here the sum number, the other number given is after 3, 5 is given. This is a printing mistake, it should be 4. So see, provision for bad and doubtful debts is to be maintained at 5% on sundry debtors. What are the debtors given to you? The amount of total debtors 87,000. And on 87,000 you are going to make the provision for RDD. Okay. And the last adjustment, stock is to be valued at rupees 82,500. Now the value of stock is in the given balance sheet, in the above balance sheet is 75,000. Now you are going to increase, that is appreciation. In the stock also there is appreciation by 7,500. These were the adjustment. Now the very important adjustment in the first sum itself they have given. See, the capital accounts of all the partners. What does this mean? Including Avni. Okay, all the partners to be adjusted in their new profit sharing ratio, and the excess amount, if any, will be transferred to their loan account. Is it understood? So this is a tedious adjustment or difficult adjustment I will explain you thoroughly, but you listen to this video twice, thrice, so that you can understand it clearly. Now, prepare profit and loss adjustment account, partners capital account, and the new balance sheet. Okay, as on 1st April 2018. Now, before this working is given to you, okay, see, I will show you the working note. Now, let the total share of the firm be 1. See, how I am telling, let that total share be 1. See, 2:3 is equal to 5, it comes to. And 5 upon 5, that means 1 it comes to. So, this share be 1. Okay. See, Vikram 2, Pradnya 3, total is 5. 5 upon 5, because addition is 5. So 5 upon 5 is equal to 1. That is why we take here, let the total share be 1. Now, see, therefore 1 minus 1/4. Why I have minus this? Because in future, this Avni, he will share the profits in the ratio of 1/4. Okay. So, I will minus this new partner share. So, remaining share for the continuing partner, that is Vikram and Pradnya, is how much? 3 upon 4. Is it clear to you? 3 upon 4. Now see, Vikram's share. What is the old ratio? Vikram 2 upon 5. Vikram's ratio is 2 upon 5 into continuing partner 3 upon 4. So 2 into 3 is equal to 6. 5 4s are 20. So the ratio is 6 upon 20. Now Pradnya's share. Old share was 3 upon 5 into remaining share is 3 upon 4 is equal to 3 3s are 9, 5 4s are 20. So it is coming 9 upon 20. Now therefore, now see, here what is happening? 20 is the denominator. Here 20 is the denominator. So, Avni's also we are going to make it 20. Okay. So, Avni's denominator also we are going to make it 20. Now, by what number we will get 20? Okay. 1 upon 4 is the original share that he is going to share in the future. But since their denominator is 20, we will make Avni's denominator also 20. So 4 multiplied by 5 will be 20. 4 multiplied by 5 will be 20. So here 20. So 5. So you'll see this denominator and numerator equal only. So 5 upon 5 you'll make. So 1 5s are 5. Now if you add up 6 plus 9 is 15 plus 5 20. See. So now this ratio has come. So new profit sharing ratio, Vikram 6, Pradnya 9 and Avni 5. Here we have completed the new profit sharing ratio, calculation of new profit sharing ratio. But in the last, after the adjustment, what they have said, that the capitals of the partner are to be adjusted in their new profit sharing ratio, and the excess amount be transferred to that loan account. Okay. So, for this now, what we are going to do, see, capital to be adjusted in their new profit sharing ratio. New profit sharing ratio, 6:9:5. This we have calculated. If Avni brings 37,500 for 5 upon 20 share, है ना? Avni how much he is bringing the capital as capital contribution of capital 37,500 for 5 upon 20 share. So for one share, how much it comes to? 7,500. Okay, you will divide 37,500 upon 5. So you will get 7,500 for one share. Now see, new profit sharing ratio 6:9:5. So 7,500 into 5 I said. Why 5? Because this 5. And this is the ratio of one share. So 7,500 into 5. This is the actual capital that he is bringing. How much? 37,500. So for 9 ratio, how much the capital should be of Pradnya? 67,500. For Vikram's 6 ratio, what will be the capital? 45,000. Is it understood by you all? Now, these amounts will be kept as new capital in their firm. What? ये क्या होगा? ये balances होंगे, ठीक है? These will be balances transferred to balance sheet. Okay, new balance sheet में this will be the new balances that will be shown as capital of Vikram, Pradnya and Avni. I hope this working is complete. After the working note, we are going to prepare profit and loss adjustment account. Now cash account is not asked, but I am preparing it to show how this cash will appear in the new balance sheet and the partners capital account, and then the new balance sheet as on 1st April 2018. Okay, now first, according to the adjustment, we are going to now profit and loss adjustment account is a nominal account, just like in the final accounts we have done profit and loss account. It is just like that, and here in this account we are going to take the revaluation of assets and liabilities. Okay, so revaluation, land and building was to be appreciated by 7,500. So here I have written, see, profit and loss adjustment account, particulars amount, particulars amount. Now first adjustment was land and building to be appreciated. What was the value given in your balance sheet? Was 37,500. But now the revalued value should be 45,000. That means there is appreciation 7,500. Now second adjustment was and furniture to be depreciated by 10%. Furniture value was 3,000. Now on 3,000, 10% depreciation, that comes to 300. Okay, then RDD is to be maintained at 5% on sundry debtors, they have told. What was the amount of sundry debtors? 87,000. Okay, on that 5%, so that will come to 4,350. And lastly, they have said the stock is to be valued at rupees 82,500. And what is the value given in the balance sheet? 75,000 is given to you. So there is an appreciation by rupees 7,500. Now see, look at these figures. This comes to 15,000 minus 4,350 and 300. That total 4,650, you will minus this. Okay, from 15,000. So remaining is what? The profit on revaluation of assets and liabilities. So what is the total profit? 10,350. Now it will be shared by old partners. So 10,350 into 2 upon 5 and 10,350 into 3 upon 5 will, these figures will appear 4,140 and Pradnya 6,210. Total will be 10,350. Now here we have completed profit and loss adjustment account. Okay. I hope this you have understood. Now second, see, I've written in the blank blue ink. Why? Because this is the balances as per your balance sheet. Okay. In your balance sheet, value of cash was given as 7,500. Now, Avni has bought as capital how much amount? 37,500 amount he has brought. Okay, as capital. So to Avni's capital 37,500. Now for the amount of goodwill, how much he has bought? Rupees 30,000 for the old partners. Okay, so to goodwill 30,000. In the credit side, nothing is there. No cash has gone out of this due to admission of a partner. So if you total up this comes to 75,000. So I will write here by balance carried down. This figure will be transferred to balance sheet. Okay. What this will happen? This will be transferred to balance sheet. This will be the new figure that will come in the balance sheet. Okay. Now, capital accounts. See, I have drawn capital accounts, particulars Vikram, Pradnya and Avni. Particulars Vikram, Pradnya and Avni. According to the existing balance sheet, what was their capital? So I've written that by balance brought down, Vikram's capital was 75,000 and Pradnya's capital was 75,000. Now, cash is being bought into business by Avni as capital. How much? 37,500. So we have written here to Avni's capital on the capital account credit side by cash account into Avni's column 37,500. Okay, 37,500. Now he has bought cash as goodwill for old partners. So to goodwill we have written in the cash column. In the capital column we will write by goodwill, and now they are going to share in the old ratio. What they are going to do? They are going to share this goodwill in the old ratio, that is 2:3 ratio. Okay, so it will come 12,000 and 18,000. Is it clear? Now, by profit and loss adjustment account, now this revaluation profit also we are going to write on the credit side. If it was a loss, then we would have written it on the debit side. So by profit and loss adjustment account, what was Vikram share? 4,130. Pradnya share 6,210. Now total up Avni's 37,000. Okay. Now in the working I had shown you how we are going to carry the balances in the balance sheet according to their new profit sharing, which was 6:9:5. For 5 shares he has bought 37,500. So for 9 share 67,500, and for 6th share how much? 45,000. So these balances will appear in the balance sheet. 45,000, 67,500, 37,500. Now to see, these will be the balances. We will, हम लोग अभी क्या करने वाले हैं, हम लोग क्रेडिट साइड की टोटल करेंगे. अवनी की तो जैसे कि वैसे आ जाएगी 37,500, दोनों साइड का उसका टोटल हो जाएगा. अभी प्रज्ञा, what will be the total of प्रज्ञा? 99,210 क्रेडिट साइड की, और हमने बैलेंस लिखा है 67,500. अभी 99,210 में से 67,500 कम करना है, लेस करना है, माइनस करना है. ओके, we will minus this figure and the remaining will be kept as loan in the firm, that is 31,710. Same way, Vikram's total on the credit side comes to 91,140 minus 45,000. Here also we are going to write the same total. So minus 45,000, remaining 46,140 will be the loan kept by Vikram in the firm. I hope you have understood profit and loss adjustment account, cash account and partners capital account. Now I'll show you the balance sheet. Now the last part, that is new balance sheet of the firm after admission of Avni. So I have drawn the balance sheet as new balance sheet as on 1st April 2018. Then liabilities amount, inner column amount, outer column assets, inner column and outer column. Now on the first we will take up the liabilities side. Okay, on the liabilities side, first is sundry creditors. There was no revaluation on sundry creditors, so that amount will be as it is, 1,05,000. Then partners loan account, in the sum they had told that excess amount on the capital be adjusted and kept as loan in the partnership firm. Now Pradnya, Vikram and Pradnya has excess capital. See, the excess capital of Vikram was 46,140 and Pradnya's was 31,710. Okay, so the total is 77,850. And then lastly we will write the new balances on the capital accounts. See, the capital accounts, then Vikram's is 45,000, Pradnya's is 67,500 and Avni's is 37,500. We have completed the liability side. See, sundry creditors, partners loan and the capital accounts. Now on the asset side, I had prepared the cash account. In that the balance carried forward was how much? 75,000. So cash account, see, outer column 75,000. Then land and building, there is appreciation in the land and building. The value as per the old balance sheet above was 37,500. Okay, and there is appreciation by 7,500. That total comes to 45,000. Then comes plant. There is no revaluation on plant. Plant is as it is. We will write the amount in the outer column, 45,000. Then comes furniture. Furniture amount is how much? As per your old balance sheet, 3,000. Less depreciation at the rate of 10%, that is 300. So minus after deducting 300, outer column 2,700. Then comes stock. The value of stock was how much? 37. 75,000. Okay, in your old balance sheet or the above balance sheet. Then there is appreciation. Okay, appreciation is by rupees 7,500, because in the adjustment they had said the value of stock will be 82,500. So there is appreciation by 7,500. And debtors, the value of debtors was how much? 87,000. Less RDD is to be maintained at 5%. We have done this adjustment in profit and loss adjustment account also on the debit side to RDD at the rate of 5%. So we will minus this 4,350 from 87,000. So the total comes to, in the outer column, 82,650. If you total up the asset side, the total of asset side is 3,32,850. If you total up the liability side, this total also is 3,32,850. That means your sum is correct. You have done all the adjustment properly.